Back to the market. Let's decode the market fall then with Sameer Narayan, who is now joining in our studios. And Sameer, whichever way you look at it, it seems like the market is absolutely disappointed. We saw triple whammy in terms of the economic data yesterday that kicked in, but we can't attribute it to just that. We're seeing an overall cascading effect of a global slowdown, do you think?
Well, Ann, the way it works is you are seeing that India, in the backdrop of a global weakness, is also not being able to kickstart the consumption cycle that has hitherto been our basic growth driver. So, for the first time you had even the trade war impact actually manifesting itself in the US manufacturing PMI, which is a widely followed index, actually slumping into contraction territory after 3 years. So, now basically it is now hitting them as well. So, in that backdrop, India somehow or the other used to be always seen as a relatively insulated to the global trade environment because our percentage contribution to global trade was very little, and hence consumption was our basic theme. Now consumption, with whatever little bit of hopes that we had post the the FM package later last month, we thought that the August sales will show some impact. Now actually that is also quite, it may not be right to expect something to happen so quickly. So having said that, one needs to now figure out that is this demand contraction cyclical or structural? I think there is enough evidence to suggest that it may be structural for some elements. Now, how long does that happen? That remains to be seen. Plus, after almost 5 months of liquidity deficit, you have started having a surplus only for the last 3 months. So that should start playing out in the system gradually on the backdrop of festive season. So I think both these factors still need to be playing out. So, but I think the August, September and July, August, September quarter earnings may actually turn out to be quite disappointing on the back of a weak June quarter as well. So I think that's where the basic concern is. So on a weak global backdrop, you don't have enough evidence from consumption being able to pick up the slack. And on the agri side also, the monsoon has been good, but the spatial distribution has not been as one would have liked. So one still needs to see as to will that provide the necessary kicker on the agri side as well. So that's where there are a lot of questions which remain unanswered.
Fair enough. And the auto sector, Sameer, that's one major pain point in the markets. We've seen the sell-off day after day, and in the data as well that has been, showing a slowdown. The latest news coming in is what sources are indicating that we could see some talks to reduce the tax incidence on hybrid vehicles, and the fitment committee may look to do away with that 15% cess. Much more needed, or is this at least a baby step in the right direction?
It is definitely a step in the right direction, because ultimately what one needs to see when the confidence is low, then the easiest way forward is that if you start giving direct benefits like maybe a tax cut or indirect benefits like excise cuts, etc., GST reductions, I think those will help. But at the margin, there is a definite change in the buying behavior as well. Because today you have the trends of Uberization, you have the millennials wanting to rent more rather than own, and a vehicle is basically an asset that doesn't get sweated much. People are rather being willing to pay more for experiences. I think these are very clear shifts, and these are generational shifts. So I don't think on the back of a strong 2-3 year kind of a run, it will be fair to expect that the auto sector will again bounce back just on the back of these measures to begin with.
Okay, let's also hear it then from SBI Chairman Rajneesh Kumar, and he defends the Finance Minister's move to merge the PSU banks. He spoke exclusively to the Economic Times and has come out with quite a bit of interesting data points, saying that as of now, whenever it happened, people would say it's not the right time, but I would like to know when is a good time to merge these banks. If there's a strong execution, then any credit slowdown can be taken care of. He also goes on to say that large banks will be capital efficient. 1 or 2 cases may come in, but stress of over 2,000 crores has been recognized, and he believes that the size of the problem as of now is known. This is when it comes to NPAs, and he doesn't anticipate any more than what has already been disclosed. In terms of the pace of recovery, Rajneesh Kumar goes on to say that more than fresh slippages, the slow pace of recovery, that remains worrisome. then to the top 5 stocks to keep on your radar this morning then, and watch out for Sun Pharma. The SEBI is likely to conduct an order and may order a forensic audit on the companies, so maybe under pressure and trade today. Meantime, HDFC AMC, we were just talking about how that stock has been doing wonders, but Morgan Stanley has come ahead and downgraded the stock. Meantime, IDBI Bank, big shot in the arm, 9,300 crore rupee fund infusion that has been approved for the bank. Varun Beverages, meantime, got you that ET Now exclusive with respect to the QIP, 900 crore rupees that opens at a floor price of 644. And finally, Balkrishna Industries on the brokerage radar. Macquarie has initiated coverage on the stock.
Growth rates in India should be moderate. It could be 5, it could be 6, but in the near term, I think it is difficult to make a case that economic growth will come up very sharply. I think we know that what is missing in the economy, what needs to be done. I think what needs to be done is that private capex has to revive.
Go on. Okay.
IFL.
Who's going belly
Be
up?
on air. Okay, this is just television and sometimes studio fun which we guys have. Kunal, come in on NBFCs.
You know, that's what the market has shrunk us to. I mean, you just have to
Keep yourself occupied.
keep it light. Yeah.
No, yesterday's selling, my view in the morning was that, look, GDP, auto sales, all those are past data. That is something which may not have impact on the market. But the selling post 2 o'clock was nothing short of, it really smacks of what could be called as capitulation. CK, the silver lining is that when markets fall and when they fall like this, typically bottoms are discovered.
Well, market bottoms, typically happen on capitulation. Of that, there is no doubt. Did we have capitulation of some sort yesterday? That is the real question to ask. Now, earlier on, I think Kunal mentioned that there was a large quantum of selling in the large cap stocks, and that is what set apart yesterday's selling from the several bouts of selling that we have seen yesterday, prior to yesterday. If you looked at the FI figures for yesterday, they were quite substantial. I think something like 2,100 crores of sale compared to only around 1,200 crores of purchase by the domestics, and we did not even have any big block deals to point out and say that these big figures for FIs because of that so-and-so block deal. So therefore it's very clear that the substantial amount of large cap participation in yesterday's price action was undoubtedly some selling by the FIs or the larger shareholders, and that would point to some sort of ending phase, because blue chip stocks or these kind of large cap stocks are let go of at the very end of a trend. Now, having said that, I would also bring in another element, which is the monthly time cycles which I usually work with, and I have 2 signatures for time changes for the month of September. The first of these was on the 3rd or 4th of September, that is yesterday and today. And the second time signature for trend change this month would be somewhere around 21st to 22nd of September. Since we hit down to a low in trading yesterday, and we had a time count for a possible change, I would believe that 10,800 support zone in the market can hold, because we now have a price and time kind of coalesce here, and typically when that happens, and coupled with the fact that there has been an excess in terms of sentiment, I think all these are reasonably potent set of ingredients to create a short-term bottom. So I would be looking for one here.
Total market matrix is that even though we are in a free fall zone in mid and small cap stocks, the ET Now greed and fear index surprisingly is not really tilted towards fear or extreme fear. I think it's a matter of day or so, because gold prices have gone high, so this mathematical indicator is not really capturing what it should have been. But if this is not fear, then I don't know what is fear in terms of where the mid and the small cap stocks are.
Not just that, Kunal was chatting in the break that silver prices and gold prices. Why don't you reiterate your view?
silver is
Because you
now-
were the first ones actually to alert that gold is on an uptick.
So gold almost touching that 40,000 mark, silver at a 5-year high, and just the last 3 weeks the silver has managed to spike up that hard. So it's trying to catch up with the rise in gold, and I think when you see such kind of a when you look at the global picture, commodities, gold and silver are rising, crude is falling down, and then look at the way the stock markets are behaving across the globe, rupee depreciating, many of the currencies which are depreciating against US dollars. All of that indicates that this is more of a bigger, I would say bigger trend in the making on the global charts rather than just short-term, outlook or short-term downtrend which you were talking about.
Yeah. Okay, another stock that I want to flag off, and pretty peculiar word coming in from Indigo, which are saying that they have adopted the Ind AS 116 and have capitalized their operating leases. They're saying that capitalizing operating leases will be marked to market. Every 1 rupee movement in the exchange rate over and above 68.90 is equal to 233 crore rupees forex mark to market. Now, net in very simple language is almost sounding like a profit warning. They are saying that they are going to have to take a forex accounting entry to the tune of about almost 233 odd crore rupees. Now, this is not spelling good news, Sameer, considering that, you just already are dealing with what's going on between the promoters. Now, this kind of mark-to-market loss warning that they are already setting out, and they being the market leader.
Well, I said this is a non-cash. So now the thing is, this has been a change in the Ind AS, which the company rightfully is communicating to the investors. And I think people who are cognizant and have been tracking the stock for a long time will understand that this entry is like you create a liability, and then that will start, it'll either get taken out or written into. So I think these are things that it's a way of life now. But yes, the larger doubt is on the demand thesis, because if you see the airline traffic growth numbers, that is actually now what is leading to the scare. So I would not be so on the short term, not so bothered about that. Yes, the company has made a change in accounting as much as to what is happening on the traffic growth.
Okay, stay with us, Sameer. Lots more to chat about. That's Interglobe Aviation, but a whole host of other stocks to watch out for. Let's get in those mid-cap picks on Trade Corner.
Sameer, we spoke about HDFC AMC, but decks are now cleared that Reliance AMC will become Nippon AMC. The difference between HDFC AMC and Reliance now is more than 60%, right? Both price to book and P multiple, whichever metrics you want to use. Do you think HDFC AMC will come down, or Reliance AMC or Nippon AMC will go higher?
Nikunj, actually there is some amount of premium that one pays for the brand. So, right now the HDFC brand is a far more credible and trustworthy brand to the Indian investors than perhaps Nippon. And maybe that's the reason why, because there are not many ideas available which are showing you that kind of, very steady ROE streams, very steady, penetration, growth on the top line. I think that's where the multiple would tend to blow out for a short period in such stocks. Okay. Now, whether will this sustain? Frankly, I don't think so. Because what will happen is that somewhere somebody will realize that I think this is just, you're preponing too much of the expected profits and valuing it on current basis. So I think at somewhere people will try and make out whether is there too much of valuation discount available in the Nippon, and that is also a function of how the Nippon strategy, once they completely take over the India operations, how does that play out? Because HDFC AMC has got far better metrics in terms of the contribution of equity to AUMs, in terms of spread in the class B metros, which are typically tend to be more stickies, those kind of variables. So I think that is where people will need to make a differentiation.
Okay, CK, insurance, we didn't talk about it. Markets, they love to talk about private banks and then always criticize PSU banks and then get worried about NBFCs. That's what we always discuss. If we keep on criticizing PSU banks, we talk good things about private banks and tend to bash down NBFCs. So I'll keep these three sectors away, CK. I'll talk about insurance. 5-6 insurance companies are listed. Which is the strongest one out of the listed lot?
Well, undoubtedly, if you take the nearer term and more recent price action, I think the most improved stock among the lot would be HDFC Life. Now, we have to remember that HDFC Life actually underperformed all the other names soon after listing, despite having the the label and the credibility of the group, etc., which was a bit of a surprise. So undoubtedly, some big player was exiting. But once that got over, that selling got over, that stock has been on an overdrive. Now it's the best performing one. But I think one of the stocks which generally doesn't get mentioned when we are talking about all this is ICICI Lombard. I think that's a stock which has been on a really superb uptrend. It's at the top of the heap if you take, let's say, a 1 year relative performance compared across all the insurance stock. And off late, particularly after that, additional stake sale which happened with SBI Life, I think that's also a stock which has, kept picking up the trend. So collectively, all of them are doing very well. A short-term outperformer would be HDFC Life, but a consistent performer has been Lombard, and playing catch-up very fast is SBI Life.
See, life it is that Dr. Narayan is picking out within the pack. PSU banks, Kunal, we saw the reaction really play out yesterday. What are you advising now?
I think the trend could continue to remain on the downside for these stocks because, yesterday it was not just the selling. There were two behaviors of the stock prices. One, that these stocks opened up 4-5% down. Then they saw incremental selling on the cash side as well. The volumes were almost at 1 week, 1 month high for individual stocks. And many of these stocks have come back to their multi-month, multi-year lows as well. So that's one important observation that the selling is getting intensified volume patterns. And the second is the heightened amount of OI increase. Now, when you see a start of an expiry and a recent expiry in terms of length of the number of days, and then you see a start of open interest increase. Canara Bank, if I remember rightly, I think the OI increased by more than 40%. So when you see such kind of a disproportionate rise in the open interest on the short side and triggers on prices where it manages to break new lows on multi-time scale charts, it just indicates that there is new or fresh shorting which has happened to these stocks, and these stocks generally could continue the trend. So I believe that the weakness should persist for many of the PSU banking names.
Yeah, and that's exactly the point that I want to discuss with you as well, Sameer. Irrespective of it being a step in the right direction, the market has taken cognizance of the teething troubles that this mega PSU banking merger is going to have. In this opportunity, do you think it's going to be gain private banks while they suffer the teething troubles, or in this decline, would you be a buyer in any of the PSBs?
Well, I said today the government's intent is to basically enable credit flow in the economy. Now, if you look at what this move would do, most of these banks, or rather the newly formed entities, would have limits to the NBFC exposure, probably hitting the 10% of tier 1 capital anyway. So I think at the margin, there may be very little or marginal impact that this would do in terms of enhancing credit flow. Anyway, as a total outstanding credit to the NBFC, you're running at close to about 6.4 trillion rupees, which at current exchange rate should be about $90 billion, which is almost all, of the total bank credit, it is anyway 8%. So I think on that basis, you will not likely to see more enhanced credit to NBFC, which means lesser riskier exposure. But having said that, these banks were anyway wanting to look at efficiency. Now, today, after this, what happens is you have to grapple with IT integration, HR issues, branch rationalization. I think those things will then occupy the bandwidth of the management first. So whether would that mean that they will suddenly start leading to better credit decisions, or will it lead to more enhanced credit? Frankly, I don't know. So I think in that backdrop, the valuation still remains good, but at the margin, will this change the way these banks operate in the short term? Maybe no.
Okay, we just heard out, a take coming in with respect to Reliance Jio and, their plans to really go all out with Jio Fiber. Sameer, what's your view on how this story is likely to pan out for the media sector, for some of these telecom players like Airtel, which is also upping its game in the same space?
Well, I think the sector will get more competitive, and I think the price leadership will still continue to rest with the single player. And I think that is where now how much penetration comes in, and post that penetration coming in, when are you able to lift prices? Because at the end of the day, you have to be able to ensure that there is some amount of revenue coming in, because if everything is available as a dole, then obviously the only fallout that we've seen is very enhanced data consumption, which has now reached almost 100 GB, etc. Now I think those are things that beyond a point people need to then be made to pay for whatever they are using.
Yeah. Okay, some other names which were in focus yesterday and perhaps maybe today as well. Cement. There was a note coming in from Bank of America Merrill Lynch wherein their channel checks were indicating that cement demand is going to be weak in the second quarter. That's going to put further pressure on pricing. Also remember, the industry volume growth is likely to shrink considering there were floods in 11 states in this particular quarter. So, cement was being sought after as a sector. Just maybe that's, going to get a little bit delayed. Aside of that, there was also MCX, wherein the shares are now under the red flag list, which means nothing but the fact that there is limited FII headroom to buy shares into MCX, and that really took a knock on MCX shares in yesterday's trading session as well. Sameer, the question is, what do you buy now? Because even sectors where you thought that growth may come in, like for instance cement, I recall about 2 months back, just everyone wanted to buy cement. There is a challenge purely because of environmental reasons.
Well, actually, it's a tough call because today in the markets, the ones that seem deep value could probably be value traps, because one doesn't know when the growth element will kick it for the value to actually get unlocked. And those where people are right now looking at us as a defensive trade are perhaps at the top end of the valuation band. So quite honestly, it's a conundrum that most investors are grappling with, and hence you are seeing that such kind of volatility, because if you look at from point to point, you feel that index has not done anything great, but within the time span it has traversed so much of distance that actually that shows there's a lot of investor indecision as well. And today, yesterday was a classic case. For the first time, a normal phenomenon in the Indian markets has been that the local DIIs plus FI plus local FIs have actually been net biased almost to the same extent as that of the FIIs. Yesterday, there was a large gap in the number, and hence you found that the impact of price destruction in the selling was actually quite pronounced. So if this trend accelerates, I don't know where the bottom could be. So although I agree with Nikunj that with after such real doomsday scenario, probably bottoms are formed, but maybe the verdict is still out.
I think the difference is, Aisha, that if you ask me